quorum present for the meeting.
Chair, I'm going to go through the list of members, so please indicate that you are present. Please remember to unmute your computer, your phone. Ruben Alonso.
Here.
Thank you. Steve Betts. Tony Bradley. Vice Mayor Caputi.
Here.
Okay, welcome. Paul Carden.
Here.
Thank you. Mike Colley. Vice Mayor Crane.
Here.
Thank you. Superintendent Donovan. Vice Mayor Edwards.
Here.
Thank you. James Griffith. Vice Mayor Hampton.
Here.
Thank you. Centra Hoffman.
I'm here.
Hi, Centra. Councilmember Jett.
Present.
Thank you. Vice Mayor Keating. Jim Kenny.
Present.
Mayor LaVault.
Yes, Denise, I'm here.
Thank you. Governor Lewis. Councilmember Luna.
Present.
Thank you. Councilmember Melnar.
Present.
Thank you. Mike Markham. Councilmember McMahon.
Present.
Thank you. Councilmember O'Brien. Vice Mayor Oliphant.
I'm here.
Thank you. Mayor Orsborn. Councilmember Pineda. Darcy Renfrew. Councilmember Rowe.
Here.
Thank you. Mark Sanders.
Here.
Thank you. Todd Sanders. Chairman Sellers.
Here.
Thank you. Councilmember September.
Here.
Thank you. Vice Mayor Smith.
Here.
Thank you. Marisa Walker. Bob Worsley.
I'm here.
Thank you. And Chair Hermosillo is here. Is there anyone that I missed or did not call?
Donovan's present.
Mark
And-
Markham? Okay.
Mike Markham. Yeah.
Anyone else?
Donovan.
Greg Donovan. Okay, thank you, Superintendent Donovan. Anybody else? We have quorum. Thank you.
Great, thank you so much. All meeting attendees will be entered muted. Phone only attendees will need to press *6 to unmute at the beginning of the meeting, and if you are muted by the host. Please remember to mute when you are not speaking to create a positive experience for all of attendees. And now we will move forward with the announcements since we have a quorum present. I would like to welcome 2 new members to the committee, Vice Mayor Tammy Caputi from the city of Scottsdale and Ruben Alonso from Arizona State University. We are excited to have you join and look forward to your participation. Also, I would like to encourage committee members to attend an opportunity to meet the governor of the state of Sonora, Alfonso Durazo, next Friday, December 17th. And during this unique opportunity, attendees will learn about the 6-year plan for binational infrastructure and economic development in the state of Sonora. Participants of this roundtable will share about their ongoing projects involving cities and organizations in Sonora and potentially new pathways for future collaboration. If you're interested in participating, please RSVP before Friday, December 10th to Elsa Belgin, MAG Policy Planner at ebelgin@azmag.gov. Alrighty, members of the public, members of the public were asked to submit written comments related to this meeting through the MAG website. Comments may be sent at any time leading up to the meeting, but must be received at least 1 hour prior to the posted start time for the meeting. This is the opportunity for the public to comment on items that fall under MAG's jurisdiction that are not on the agenda or that are on the agenda for discussion and not for action. MAG staff, have we received any public comments? And if so, can they be read at this time, please?
We received no public comment for this item or any other item on the agenda.
Great, thank you so much. All right, moving forward, our next item is approval of the October 5th, 2021 meeting minutes. Does any member of the EDC have questions or comments on the minutes? All right, could I have a motion to approve the October 5th, 2021 EDC meeting minutes?
So moved.
This is Vice Mayor Smith. I'll second.
Okay. Who was the first? I'm sorry, I missed that.
This is Councilmember David Luna.
Okay. So we have a first motion by Councilmember David Luna, and then we have a second motion by Vice Mayor Smith. Is there any discussion on the motion? All right, Mag Staff, would you please take your roll call vote?
Yes, thank you, Chair. I will go down the list of members and please indicate how you vote when I call your name. Ruben Alonso.
Yes.
Thank you. Steve Betts. Tony Bradley. Vice Mayor Caputi.
Yes.
Thank you. Paul Cardin.
Yes.
Thank you. Mike Cowley. Vice Mayor Crane.
Yes.
Thank you. Superintendent Donovan.
Yes.
Thank you. Vice Mayor Edwards.
Yes.
Thank you. James Griffiths. Vice Mayor Hampton.
Yes.
Thank you. Senator Hoffman.
Yes.
Thank you. Councilmember Judd.
Aye.
Thank you. Vice Keating. Jim Kenny. Mayor Laval.
Yes.
Governor Lewis. Councilmember Luna.
Yes.
Councilmember Malnar. Mike Markham.
Yes.
Thank you. Councilmember McMahon.
Yes.
Thank you. Vice Mayor Oliphant.
Yes.
Thank you. Mayor Osborne. Councilmember Pineda. Darcy Renfrew. Councilmember Rowe.
Yes. Yes.
Thank you. Mark Sanders.
Yes.
Todd Sanders. Chairman Sellers.
Yes.
Thank you. Councilmember September.
Yes.
Vice Mayor Smith.
Yes.
Thank you. Marisa Walker. Bob Worsley.
Yes.
Thank you. And Chair, how do you vote?
Yes.
Thank you. Is there anyone that I forgot? Okay, the agenda item passed unanimously.
Great, thank you so much. All right, the next item on the agenda is an economic overview of Arizona and the region. Dr. George Hammond, Director of the Economic and Business Research Center at the University of Arizona Eller College of Management, will discuss the status of the economy and economic performance since the pandemic began. Dr. Hammond, it's all yours.
Okay, great. Thank you. It's a pleasure to be here. It's nice to see all of you. So let's jump right in. If we could advance to the next slide, please. Thank you. One more. So let's start off by talking about the labor market. So for the Phoenix Metropolitan Statistical Area, which includes Maricopa County and Pinal County, we saw the huge job losses during the early months of the pandemic. And what you see there is about a 240,000 job loss from February to April of last year. As the stay-at-home orders were lifted, we see the initially very strong job bounce back in May and June. And from June of last year through October of this year, you can see continued job growth, but at a somewhat slower pace than those first 2 months. But overall, the job growth from June of last year for Phoenix and for the state of Arizona as a whole was really quite rapid compared to the monthly job growth that we experienced during the 5 years before the pandemic began. And in fact, as you can see here, the Phoenix MSA has replaced all of the jobs that were lost during those early months of the pandemic. So if we could advance to the next slide, please. And Phoenix was one of the 5 metropolitan statistical areas in the state out of the 7 that we have total that have replaced all of the jobs lost during the early months of the pandemic. So Phoenix jobs are significantly above where they were before the pandemic began. The 2 metropolitan areas that have yet to replace all of the jobs lost during the pandemic are Flagstaff, which has replaced about 85% of the jobs lost during the early months of the pandemic, and Tucson, which has replaced about 78%. And, the story for Flagstaff probably revolves around the high concentration of leisure and hospitality jobs there. As we'll see, those have been slower to come back. That's also part of the story, I think, for Tucson. The Tucson's slow recovery probably also reflects the relatively large share of residents down here that are age 65 and older. And that's an age group that may be slower to return to the kind of pre-pandemic activities that we were doing before all of this began. And that may be delaying the recovery there in Tucson a bit. But overall, most of the metropolitan areas in the state have recovered all of the jobs lost during those early months. So if we could advance to the next slide. But as you can see, the recovery has been uneven across industries. So this is the net change in jobs from February of last year, just before the pandemic began, to October of this year. That's the most recent month for which we have data. And as you can see, leisure and hospitality jobs in the Phoenix metro area are nearly 17,000 below where they were in February of last year. Government jobs, about 9,000 below. Most of those are local government jobs. Information jobs are 3,600 below. Information is a category that includes lots of different things. Your local cell phone store would be in there. It also includes newspapers, radio, TV jobs. The sector there that's really lagging is motion picture and sound recording. So that's a sector that has yet to really bounce back. Many of the other industries are pretty close to where they were before the pandemic began. But as we move up the graph, you'll see education and health services is about 6,000 jobs above where it was in February. Professional and business services, another wide-ranging category. This would include accountants, lawyers, management consultants, computer scientists, engineers tend to fall in here as well, as do call center jobs. But these professional and business services jobs are almost 10,000 above February of last year. But really the sector that never really declined during the pandemic and has generated strong job growth is trade, transportation, and utilities. And what's really driving that is job growth in transportation and warehousing. This was a sector that was already growing fairly strongly before the pandemic began. But of course, it also reflects the big shift towards online shopping during the pandemic, as well as the shift to increased use of delivery services. So there's a lot of variety in terms of the recovery rates across industries. And it's really leisure and hospitality jobs that are still lagging a bit behind. So next slide, please. Now, this whole idea of getting back to where we were before the pandemic began is a pretty low bar. That's kind of the first milestone that we would expect to check off on the recovery checklist. But now that we've done that in Phoenix, and we'll do that soon for Arizona, the state of Arizona is about 6,000 jobs below where it was in February of 2020. We'll turn our attention to some of the ratios that we track, namely the unemployment rate, the employment to population ratio, and the labor force participation rate. And this graph shows the Arizona and US unemployment rates. And you can see that The Arizona rate's a bit above the national average. That's not unusual, really. For most of the decade before the pandemic began, Arizona's unemployment rate was, 0.5% to a full percentage point above the national average. And we're basically back to that same sort of situation, but we are making progress in terms of driving the state unemployment rate down. It's still a little bit above where it was before the pandemic began, but we're certainly closing in on that next milestone. You may be wondering how Arizona's unemployment rate can be above the national average, given the strong job growth we've been seeing. This is probably being driven by the relatively rapid population growth. Arizona attracts a lot of migrants from other states. Think of a husband and wife moving to the state. Imagine the wife has a job and the husband doesn't, and it might take the husband a couple of months to find a job here in the state. So that's one way that rapid population growth can contribute to a relative to a above average, or at least above the national average unemployment rate. So next slide, please. So overall, the labor market, by several indicators is approaching where it was before the pandemic began, but we are still seeing a lot of turmoil in the labor market as firms struggle to hire, and workers are kind of reevaluating their situation and in some respects sitting on the sidelines for now. We think that'll gradually sort itself out over the next year or so. And one thing that will help that is the recovery in the travel and tourism industries. So I put together some indicators that we use to track that. The graph on the left here shows sales of gasoline, both the dollar value of gas sold and the gallons of gas. You also see Sky Harbor passengers and Tucson International passengers. This is all indexed to January of 2020. And what you can see here is that, gasoline sales and, including sales of by gallon and Sky Harbor passengers are basically back to where they were before the pandemic began. Tucson International still has a little bit of work to do to get back to that pre-pandemic level. The graph on the right shows seated diners at restaurants using the Open Table app. So these are restaurants where you would go to spend a couple hours with family and friends. It's one segment of the restaurant industry. The good news here is that seated diners at these sorts of restaurants are basically back to where they were before the pandemic began, or back to where they were this time in 2019, both for Phoenix and for the state of Arizona as a whole. So at least in terms of that measure of activity, the restaurants are back to pre-pandemic levels of activity. Next slide, please. Now, one measure of activity that hasn't quite returned to where it was before the pandemic began is travel to retail and recreation places. The graph on the left shows US and travel measures for Maricopa County. And you'll notice the seasonality. Travel to retail and recreation places tends to rise during the summer months nationally, but it drops off a little bit here in Arizona, probably driven by the heat. And we get the opposite trend in the winter months nationally and then in Arizona. But overall, while travel to retail and recreation places in Maricopa County has been gradually trending up, it's still below where it was before the pandemic began. Some of this may be reflecting the shift to online shopping. We may not see this indicator go back to where it was before the pandemic began, just because we're all doing a lot more online shopping than we were in 2019. The graph on the right shows a key indicator of international tourism, principally Mexican visitors. These show northbound border crossings through Arizona's border ports of entry for pedestrians and basically people in cars. And you notice the big drop off as the border is closed to non-essential travel early on in the pandemic. It kind of gradually, haltingly trends up a little bit, but now that the border has been opened more to more types of travel, We hope to see that gradually trend up, and that will be particularly helpful to those communities along the southern border. But it will also allow more travel for tourism purposes up into Tucson and into Phoenix. So next slide, please. So this shows taxable sales for a variety of categories. You'll notice the retail, including remote sales. These are, of course, primarily sales of goods, tangible goods. And notice that this data is all indexed back to January of 2020. And we saw these taxable sales from purchases of goods drop off during the very early months of the pandemic and then really explode, really grow rapidly. And they still, 27, 28% above where they were in January of 2020. Note the contrast with the travel and tourism related services like restaurants and bars, amusements, hotels and motels. They drop way off during the early months and kind of haltingly come back until we get to last summer when things really rebounded. We see a little bit of a slowdown in these tourism related services in the early fall months. That could be related to the expansion of the pandemic driven by the Delta variant. But overall, spending, these taxable sales measures are back above where they were before the pandemic began. Part of that certainly reflects the increases in income driven by federal income support, as well as more optimism about the progress of the pandemic. But notice the disconnect here. We see various, many measures of activity in the travel and tourism sectors are back to normal. Seated diners at restaurants, travel through the airport, taxable sales. The metric that's not back to normal for the travel and tourism industry is jobs. Those leisure and hospitality jobs are still significantly below where they were before the pandemic began. So next slide. And a big factor in driving the strong growth, particularly in spending on goods, has been the huge influx of federal income support to all states across the nation, as well as here in Arizona and Phoenix. Statewide, Arizona's personal income rose by over 10% in 2020 while we were seeing these huge job losses. It was really the transfer payments. So that's includes everything from the economic impact payments, the STIMI payments, as the young people call them, the unemployment insurance, expanded federal unemployment insurance, and even a portion of the Paycheck Protection Program payments are all reflected in those transfers. So those went way up, helped to support taxable sales growth, certainly in the state. The thing to keep in mind is that much of that federal income support has expired, and so that support is dying out and will be gone as we go through the end of this year and into next year. So we will see that income growth slow down and probably a significant slowdown in the taxable sales growth as we get into 2022 as well. And that's going to be a big contrast because we expect job growth to ramp up as we continue to recover. So next slide, please. So one big transformation that we've seen during the pandemic is this huge spike in house prices. So this shows the level of median home prices in Phoenix, Tucson, and then the Case-Shiller index for Phoenix. We don't have a similar measure for Tucson. And what you see is, basically house prices going vertical in roughly the summer of this year. These are over the year house price increases of 20 to 30%, both in Phoenix and in Tucson. So house prices really rising rapidly. There's a number of factors driving that. Some of those are originating from the demand side. We think we're seeing an influx of migrants, particularly from the high-cost Western metropolitan areas, with remote workers choosing to relocate to a place with a lower cost of living and more affordable housing. Certainly Arizona would be a target there. It's likely that we're also seeing reduced housing supply. We know housing inventories were declining before the pandemic began, and they dropped off even more rapidly during the last year. We're also seeing upward cost pressures, both on raw materials and for labor in the construction sector. So that's driving up prices for new home construction. The good news here is we've also seen, while house prices are rising rapidly, we're seeing really strong increases in housing permits. They are running at levels both last year and so far this year that we haven't seen since 2006 or 2007. So that should help increase supply as we move through the next year. Next slide, please. So with house prices rising really rapidly, at 20–30%, they're outpacing income growth. And that's affecting housing affordability. So I put together the data for one common measure. It's one a lot of people look to. This is the National Association of Home Builders Wells Fargo Index. The way to read this is that in the third quarter of 2019, for the Phoenix metropolitan area, roughly 68% of homes sold were affordable to a family making the median income. If we move forward through the third quarter of this year, only about 51% of homes sold in Phoenix were affordable to a family making the median income. So that's a drop in affordability of about 17 percentage points. And of course, this is something that we're seeing nationwide. As you can see here, most of the metropolitan areas we track on this particular graph saw declines in housing affordability, including in Tucson, but certainly the Phoenix MSA saw one of the bigger declines. So this is going to be a concern going forward. Housing is getting much less affordable in Phoenix and in Tucson. But you want to keep in mind that in terms of migration and the attractiveness of Arizona to migrants from other states, that Arizona housing is still much more affordable than it is, for instance, in San Diego, where only about 16% of the homes that were sold in the third quarter were affordable to a family making the median income. Also more affordable than LA, San Francisco, San Jose, and even Seattle. But it is important to note that housing affordability in the Phoenix MSA is now below the national average. So what are the takeaways from all this? Number one, the labor market is recovering well, but there's still a lot of turmoil going on underneath the surface as firms have to work really hard to hire workers. And to some extent, workers are still sitting on the sidelines, kind of rethinking their life choices. What industry do they want to work in? What occupation do they want to have going forward? The travel and tourism sectors are recovering well, but we still are seeing big employment gaps in leisure and hospitality compared to where it was before the pandemic began. Overall, house prices are rising rapidly. That's driving down housing affordability in really significant ways that will be a concern going forward. So overall, Arizona, Phoenix, and even Tucson are well positioned to continue growing in the near future. You want to keep in mind that we are likely to see a pretty significant slowdown in taxable sales and income growth as we adjust to the ending of the federal income support programs this year. So with that, I'll conclude my remarks and turn it back over.
Great. Thank you so much, Dr. Hammond. With the conclusion of this presentation, are there any questions from the membership? Alrighty, hearing none, we will move forward. This item on the agenda is for information and discussion only. Thank you again, Dr. Hammond. That was really, really great information.
Thank you.
Thank you. All right, the next item on the agenda is an update on the Momentum 2050 MAG Regional Transportation Plan. Audra Kester-Thomas, MAG Transportation Planning Program Manager, will provide an update on the adoption of the RTP and next steps associated with enabling legislation. Audra,
Thank you.
all yours.
Thank you, Madam Chairwoman, members of MAG's EDC. Pleased to be with you today to give you an update on the latest. With Momentum 2050, MAG's now adopted Regional Transportation Plan. Next slide. Next slide. I'm going to talk just about the final stages of our air quality conformity process as required by federal statute, and then talk about how our focus now has pivoted to enabling legislation. Next slide. You'll see here our calendar. You can see we've successfully delivered on schedule with Regional Council's adoption last week. Next slide. Just by way of reminder, while our focus over the last 2 years or so has been on an investment portfolio to be supported by an extension of Proposition 400, we now have to couple all of those decisions into 2 federally required planning documents. A long-range regional transportation plan that covers at least a 20-year horizon and focuses on regionally significant projects and how we intend to spend federal funding, as well as a transportation improvement program, which is a short-range list of projects, horizon year of at least 4 years, that includes all regionally significant projects regardless of funding source, and by definition serves as the first 4 years of our regional transportation plan. Both of these documents must be performance-based, be fiscally constrained. In other words, the projects contained herein must have an identified funding source or sources to be programmed for those projects to be enabled. They must be updated at least every 4 years, although MAG's practice is typically updating every other year, and then reflect all funding sources and programs. So for purposes of our work, and why this gets a little bit more complex here at the end of our planning process, these documents must include the last 4 years of the Proposition 400 program, the proposed 25-year extension of Proposition 400 and the projects and programs contained therein, Pinell County RTA projects that exist within MAG's planning area in the northern Pinell County portions, as well as any wholly locally funded regionally significant projects. All of the projects contained in these 2 planning documents also must be proven to be air quality conformant. Next slide. We finished our transportation modeling and air quality modeling this fall and concluded into those results into our air quality conformity plan. These 3 documents were then out for a 30-day final public comment period. We then, after the conclusion of that comment period, brought the 3 documents through our our policy committee process starting in November, and ultimately culminating in last Wednesday's adoption by Regional Council of the Regional Transportation Plan, the Transportation Improvement Program, and our air quality conformity analysis. We're expecting concurrence on our air quality conformity from the Federal Highway Administration and Federal Transit Administration sometimes within the next month. Next slide. At my last presentation to EDC, we did go over the investment plan supported by a 25-year extension of Proposition 400, so I won't spend a ton of time on it. You're familiar with this map. It is a multimodal portfolio, including advancements of our freeway and highway network and our HOV network, high capacity transit investments, including bus rapid transit, light rail and streetcar, as well as a myriad of arterial project investments as identified on this map. Next slide. Just some facts and figures about the investment portfolio. One thing I always want to draw attention to is not to lose sight of the regionally significant programs for which we've set aside funding for. You'll see those highlighted in that salmon color at the bottom of the page. These are important programs that represent regionally significant investments. It also allows us to be nimble into our future. Every few years going out for a call for projects, identifying the best and brightest projects to be funded. Next slide. We've been through these programs before, so I won't spend a lot of time here other than just to emphasize many of these programs very much represent projects and or investments that are particularly popular and receive a tremendous amount of support from the public. We've received a lot of public feedback and support for the expansion, for example, of our active transportation program. Those are those bicycle and pedestrian improvements, and the set aside for $1 billion over the course of 25 years to ensure that we're providing protected infrastructure for some of our most vulnerable users. What you see in these programs identified on this page are really important investments that I just want to emphasize are highly supported by the public, and we see a lot of support for in our feedback. Next slide. As we move away from the plan development stages and into plan information and education stages, we'll be updating our project website, our momentumplan.com, with more resources that talk about what's included in this plan. We already have that interactive map that's dynamic. You can zoom in and out and see some of those discrete investments, but we'll be adding other resources over the course of the upcoming weeks and months as we do turn towards more of a public information effort aside and aligned with our campaign. Next slide. We now wholly turn our focus to enabling legislation to allow for the proposition to be placed on Maricopa County ballots next November 2022. Next slide. Nathan Pryor couldn't be with us today, but I wanted to provide a few of these slides in his absence to talk a little bit more about our efforts for enabling legislation. This is work that we presented to our regional council last week and highlights some of the important aspects associated with enabling legislation. Next slide. This is unique for Maricopa County. We do have to go to the legislature to gain that permission to ask our voters for a 25-year extension of the sales tax. And so we thought we'd just provide just a few high-level points about what enabling legislation does. It allows us to have authorization to place a countywide ballot to extend the half-cent sales tax for another 25 years, describes and defines the investment plan to be what guides the allocation of funding over the course of the 25-year horizon, allocating 100% of the sales tax revenues to this multimodal portfolio, including roadways, freeways, and transit investments. It also prescribes the process for any major changes that Transportation Policy Committee and Regional Council may make on behalf of the region, as well as the public input process thereof, and then makes a few administrative updates, including population thresholds, since Proposition 400 was passed back in 2004. Next slide. Last week at Regional Council, we encouraged our elected officials to begin meeting with legislators to make sure that our partners at the legislature understand just how important enabling legislation is, not just for the region, but the state's prosperity, and also how important this plan that was developed over the course of 2 years of a very public-facing process and ultimately culminating in a unanimous decision by all of our member agencies, how important that plan is to the continued prosperity of this region. I will acknowledge that we stand ready to help you offline, provide resources as you work with your own constituents, but also with legislators to help emphasize just how important enabling legislation is, not only for this portfolio of regional investments, but also for the prospects of chasing new federal discretionary money, which we see as a real opportunity for us with the passing of the federal infrastructure bill. No region is better positioned than our own with a brand new plan to chase new dollars to bring to this region and state, making us even more competitive in the long run. So with that, that completes my presentation today. Happy to answer any questions and provide more information after the meeting. I would just encourage any member to reach out to Nathan Pryor or any member of MAG staff will be ready to assist.
Great, thank you so much, Ms. Kester-Thomas. Are there any questions from the membership?
This is Cintra. I just have a comment.
Go ahead.
from the business community perspective, I thank you for the process, the continued information on it, and we certainly look forward to continuing to work together as we go through this next process with the legislature. So thank you to the MAG team.
Thank you so much for that, Sintra. Any other comments or questions before we move forward? All right, like Audra stated, there is an opportunity to reach out if you have any comments or questions later on. All right, this item is on the agenda for information and discussion only. We will move forward with the next item on the agenda, which is an update and analysis of the 2020 census data. Scott Wilkin, MAG Senior Planning Project Manager, will provide this update.
Thank you, Madam Chair, members of the EDC. Next slide, please. I'm going to give you a quick update on Census 2020, the data that we have so far, some initial analysis we've done, and what to expect going forward. Next slide. Census 2020 was the initial wave of data was released back in August in a legacy format that only some specialized users were able to decipher. We downloaded that and we were able to use it. We put up some summary tables and some charts and an interactive map at azmag.gov/census within 48 hours of that release back in August. The Census Bureau then released a more user-friendly format in September, but it's all the same data. So far, we have some limited information from Census 2020 with more to come in the future. Next slide, please. So far, we've been able to put together and release some tables showing population and housing summaries, how that's changed since 2010, ranking of our member agencies as far as their population, total population and change. We have some information on race and ethnicity, some detailed tables there. This initial release only had information on age for people on 0 to 17 or 18 plus. This was the redistricting data, and so they're focused more on voting age, and so that's why we only have the 2 age categories so far. We also have vacancy rate information, population density, change in minority population, and then a series of maps for the region and the state showing a lot of the information that we have so far. Next slide, please. So a few highlights, if you haven't heard by now, Phoenix is officially the 5th largest city in the country, passing Philadelphia. It is also the fastest growing city among the 10 most populous cities in the nation. Obviously, it's the largest city in Maricopa County. Its vacancy rate is significantly below the regional average, despite making up such a large percentage of the region. Buckeye is also grew faster than any other city in the nation. The Census Bureau, when they look at cities that had population of 50,000 or more back in 2010, and looking at the growth rate of all those cities, Buckeye was the fastest in that group. And then non-Hispanic, other race / 2 or more races grew at 142%. We know that some of this is probably true growth, but there were some changes to how the Census Bureau is classifying and doing some self-identification with that data. And so we think that number is a little bit inflated. It's not a significant number, a significant portion of our population, so it doesn't really affect our analysis that much, but it is interesting to note how much it grew due to those factors. Next slide, please. Maricopa County added more residents than any other county in the nation, and 86% of the population growth in the state was in the Phoenix MSA. That's Maricopa County and Pinal County. And we were surprised to find 5 counties across the state officially declined in population. And on the screen now, you can see that some comparisons to Maricopa County, Arizona, and the US, that Maricopa County had a higher population growth rate than the state and the nation. Arizona also grew faster than the nation as a whole. The same is true for ages 18 plus. And then Maricopa County's minority population grew faster than the state, but slightly slower than the nation as a whole. Next slide, please. Now we have on the screen some information on race and ethnicity from the 2020 census. You can see the bar graph there shows the white non-Hispanic population in gray, and then Hispanic population, and then other non-Hispanic population as well. Arizona and Maricopa County have a smaller white non-Hispanic population than the United States as a whole, and a much larger Hispanic population than the US as a whole. We also found that 5 counties across the state now have a minority majority population, and 33 jurisdictions across Arizona also have a higher higher population of minorities than white non-Hispanic, including Phoenix, Tucson, Glendale, and Yuma. There are also a number of counties that are just below that 50% mark. So we'll be watching that as the decade continues to see where we think that's going to be in 2030. Next slide. So our initial review of Census 2020 is next slide. We can see the population numbers for the state, county, and the 2 counties there on the left for April 1st, 2020 from Census. This is comparing the official Census 2020 number to the Census Bureau's own annual population estimate, as well as the MAG population estimate that we work with the state demographer on every year and get adopted by regional council in December. We didn't know how this was going to come out. We didn't know how close these estimates were going to be. And as you can see, the 2% difference columns, the MAG AZOEO estimates were much closer to the final official numbers than the Census Bureau's own estimates. So we're pretty proud of that, especially the Maricopa County estimate being within 0.5% of the final 2020 number. Next slide. We also did a housing unit comparison for Maricopa County, and then a little bit that we have in Yavapai County, primarily Wickenburg. The green numbers are where the Census Bureau had more housing units than our housing unit estimate. And then the red numbers are where MAG has more housing units than the Census Bureau in Census 2020. And so it's about half and half, and it comes out to pretty close total. We're not sure why some of these numbers are so different. Theoretically, this should be a lot easier to calculate and predict and estimate than the population numbers, because we get the housing completions directly from the member agencies. Those go to the state demographer, who in turn sends them to the Census Bureau. We also worked with our member agencies to identify all the addresses in their jurisdictions to make sure that the Census Bureau had all the places that they needed to send the census cards, and then go door to door for non-response follow-up. So we're still looking into that, and we're not sure exactly why there is the differences there, but not huge differences, but there are some, and we're trying to figure that out. On the next slide, you'll see the same thing for Pinal County. And here we were pretty consistently higher than the Census Bureau. And again, we don't know why that is. We're dead on for Hayden and Marana, but for the rest of Pinal County, we were, for the most part, we were higher. And so we're trying to figure that out as well. Next slide. So for future work, as I said, we're going to keep looking into those differences in housing count numbers, compare that with the housing unit data from the assessor's office. Along with that goes into the initial data for the count question resolution program, which is an opportunity the Census Bureau gives local jurisdictions to challenge the location of housing units. If they think that housing units were misplaced in the wrong jurisdiction, wrong block group or block, then they can submit those challenges. And if they provide sufficient proof, the Census Bureau will issue a RATA and move those housing units to the correct spot. It won't change the population number, the Census 2020 population number, but it could have an effect on the annual population estimates moving forward for the rest of the decade. We are also working with the state demographer to finalize the fiscal year population estimates. I've just seen in the past few days some nearly final draft numbers from the state demographer, and that will be adopted in the next 8 days. They have to get that approved by OEO by December 15th. And then we're going to do some deeper analysis into occupation rates and household size coming out of Census 2020. Those are two of the most critical things we get from the decennial census for our long range modeling. And honestly, we're not sure how reliable they're going to be for the Census 2020 at certain geographies. And so we're looking at that and seeing if there are any alternative sources that we might be able to use instead of or in conjunction with the Census Bureau. We also expect another big dump of more detailed data sometime next year. That's as deep as specific as they've gotten so far. They've said they estimate it to come out in 2022. And as soon as we get that, we will notify our member agencies and release some analysis of that. I think I have one more slide. If we can go to the next slide. Again, if you want to see what we put out so far, azmag.gov/census. We also have a lot more data, data.azmag.gov and maps.azmag.gov if you are interested. My contact information is on the screen. If you have any other questions, I can take them now or I can take them offline as you have the. Thank you.
Great. Thank you so much, Mr. Wilkin. Are there any questions during this time?
Yes, this is Cintra again. I do have a question. Scott, can you go back and talk a little bit about the vacancy rate? Have you guys done a comparison with the vacancy rate from the 2010 census as compared to 2020? And the reason I ask that is I know, in terms of economic development and getting capital investment into this region, years ago, what we're facing is the perception that the housing boom is still based on an investment portfolio as opposed to an owner-occupied portfolio. So just out of curiosity, has there been any comparison? And if not, I would certainly recommend that we do that because I think that would be a great message point for us to have moving forward.
Thank you. Great question. I don't think we've looked too much at comparing the vacancy rate from 2020 to 2010, just because 2010 was so different than really any time. So many people had lost their homes due to foreclosure or having to do a short sale, and people left, and there was a huge amount of investor activity at that time. I don't think it would be as useful as it should to compare the vacancy rate from 10 to 20. What we've done is we're looking at vacancy rates that have come throughout the decade from the American Community Survey. That's been our primary. We've been able to look at that throughout the decade, just because we know that 2010 was greatly inflated. But we're also you bring up a great point about the investor activity, and we're looking at amounts of investor activity through some other avenues, particularly at comparing the owner address to the site address. If somebody has their mail, is listed with the assessor as having their mail sent to somewhere out of the state or even out of the country, then it's a pretty good bet that is an investor owned property and not owner occupied. And we've done a lot of analysis with that. Plus, we've got information particularly for short-term rentals, because we know that a lot of people have bought those to rent those out through Airbnb, that type of thing. And we know that there is an increase in vacancy rate due to that, especially in Paradise Valley and Scottsdale, where the two hardest hit because of those factors in our region. So we are trying to get to the bottom of vacancy rate. And I think you've got a great point there that we need to dispel the myth that all our houses are owned by Canadians. Comparing to 2020 or 2010 is probably not going to be the best way to do it. I know we've looked at that, but we've got a lot of other avenues to do that too.
Yeah, and I think that whatever the methodology is, I think it needs to be looked at, because from an internal perspective, internal being the state and the region, we know what the difference is between in the 10-year span and how the state or the region has evolved. But when we look at capital investment from, say, New York and California and San Francisco, they're not aware. I mean, they see another housing boom in the Phoenix metro area. Well, how is that different than the last time when the market just busted? So I think that's some of the things that we've been hearing is convincing capital investment that we're a different market today, and we are more owner occupied. There are residents that are occupying these homes. So again, I'm not sure what the right methodology would be, but I think we definitely need a message point to move past that barrier.
Right. And Madam Chair, if I can add one more thing that we're looking at, we've got a lot of information on movers, where people are moving from. And so we're able to show that it's not just investors buying properties that is happening, but we can also show people are moving here from all over the country. And we've got a lot of information on that, and we're going to keep looking at that as well.
Great, thank you so much for that. Are there any other comments, questions before we move forward? Okay, hearing none, this item is on the agenda for information and discussion only, which moves us to item number 7, which are requests for future agenda items. Are there any requests from the membership for an item for a future agenda? All right, we will move forward with the next item. Are there any announcements from the membership? Okay, with no announcements, the meeting is now adjourned. The next meeting of the MAG Economic Development Committee will be on February 1st, 2022. And for those who celebrate any festivities during this time, happy holidays and take care. See you soon.